Vancouver's market just hit historic lows nobody is talking about. This video explains why and what it means for your home. Stick around to the end because I'm going to show you the exact numbers that made 2025 one of the most abnormal years we've seen in decades. And then I'll tell you what I think matters most for 2026 if you're a homeowner, a buyer, or an investor. And I do want to be super clear, this is not a doom and gloom video. This is a video about structure because real estate markets don't change when the headlines change, they change when behavior changes. And 2025 was a year where behavior completely flipped. So let's start with the core problem. In Metro Vancouver, we just had the lowest annual sales total in more than 20 years. And that is straight from the Greater Vancouver Real Estate Board. Total residential sales in 2025 were 23,800. And in 2024, it was 26,561. And the 10-year annual average is 31,625. So when you hear slow year, this is what it actually means. 2025 sales were down 10.4% from 2024 and 24.7% below the 10-year average. That is a massive gap. Now here's what makes this even more important. At the same time sales dropped, listings surged like crazy. Metro Vancouver has 65,335 properties listed in 2025, which is up from 60,388 in 2024. And it's also above the 10-year average of 57,782. So think about what that means. Lower demand, higher supply, and that's how markets tilt towards buyers. And GVR also notes this was the highest total of listings on record since the mid-1990s, and it eclipsed the previous record high in 2008 by a little over 1,000 listings. So if you're sitting there thinking this feels a little bit different, you're not crazy. It is very different. Now let's zoom out to the end of the year because December tells you what the market is actually doing right now. In December of 2025, Metro Vancouver had 1,537 sales. That is down 12.9% from December of 2024, which had 1,765 sales. In December 2025 was 20.7% below the 10-year seasonal average. Next, let's move on to some of the inventory numbers. The total number of active listings in Metro Vancouver at the end of December was 12,550. That is up 14.6% compared to December of 2024, and it's 34.8% above the 10-year seasonal average of 9,308. And that's the part that's really changing the game right now because the high inventory is giving buyers choice and the sellers a ton of competition. And you can see that in the sales to active listing ratio in December of 2025. The overall sales to active listing ratio was 12.7%, detached was 9.3%, townhomes were 14.6%, and apartments were 15.1%. Why does the ratio matter? Because GVR's own historical analysis of downward pressure on prices occurs when the ratio is below 12% for a sustained period, and upward pressure tends to happen when it's above 20% over several months. So what does that mean in plain English? Detached is currently the weakest segment on that ratio, and that matters a lot for Surrey and Langley families, especially because detached and ground-oriented product is the emotional heart of the market. Now let's talk prices because this is where people either get scared or they get delusional. The MLS HPI composite benchmark price for all residential properties in Metro Vancouver is currently $1,114,800. That is down 4.5% year over year and 0.8% month over month. So let's go by type. In December in 2025, detached benchmark is $1,879,800, down 5.3% year over year. The apartment benchmark is $710,000, down 5.3% year over year, and the townhouse benchmark is $1,056,600, down 5% year over year. So prices have eased across all product types, but here's the real lesson. When you combine low sales, high listings, and prices drifting down, you don't get one dramatic crash, you start to get a grind. Just more negotiating, more failed expectations, more price reductions, and a ton of sellers just saying, we'll just try again in the spring. And the spring is exactly why I'm making this video, because the listings that didn't sell in 2025 don't just disappear, they come back. Now connecting this to Surrey and Langley, because I know a lot of you watching are not buying in kits or Yaletown, you might be thinking, what is Vancouver being slow due to me? And here's the answer. Vancouver sets the tone for the region, not because it is the same market, but because it drives a chain reaction. When Vancouver slows, move-up buyers hesitate. And when move-up buyers hesitate, the Surrey and Langley seller pool gets stuck. And when sellers get stuck, listings stack up. When listings stack up, buyers stop rushing. That is a behavioral chain. Now let's bring in the Fraser Valley numbers because I don't want this just to be a Vancouver only story. The Fraser Valley Real Estate Board recorded 12,224 sales in 2025, which is down 16% from 2024 and 33% below the 10-year average. They also reported that Surrey accounted for 48% of 2025 sales and Langley accounted for 24%. So if you're a Surrey or a Langley family watching this, you're not the sidelines of the story, you're literally the main market. And on the supply side, the Fraser Valley Real Estate Board notes new listings climbed to 37,963 in 2025. Now December in the Fraser Valley, they recorded 919 sales in December. Overall inventory ended the year with 6,965 active listings, and their sales to active listing ratio was about 13% in December. So again, you're seeing the same theme. Inventory elevated, buyers with more leverage, the market slows down. Next, we'll move on to the big question. If prices are down and buyers have leverage, why are the sales still so low? And this is where most people get it wrong. They think the market is a spreadsheet, where it's not. It's basically a game of confidence. Yes, affordability really matters. And yes, rates matter, but what really freezes the market is uncertainty. And we have had a ton of uncertainty. We can actually anchor the rate change with real data. Bank of Canada's policy rate was 3.25% in December of 2024, and it was 2.25% in December of 2025. So borrowing costs did fall meaningfully. And GVR specifically noted borrowing costs fell nearly 1 percentage point alongside lower prices and more inventory. So why did the market not bounce? It's because the confidence wasn't there. And also because the demand composition changed. Here's a key piece that affects rentals, condos, entry-level demand, and the investor layer. Statistics Canada reported that the number of non-permanent residents dropped from 3,024,216 on July 1st, 2025 to 2,847,737 on October 1st, 2025. That is a big shift in a short time. Why should you care? Because non-residents heavily impact rental demand, entry-level condos, and household formation behavior. So when that demand softens, it changes the tone in the condo market first, then it starts to ripple out. Now let me simplify the 2025 story into one sentence. 2025 was a year where supply showed up and demand did not. That is why it felt weird and sellers got super frustrated. That's why buyers get super picky. Now to get a little bit more practical, if you're a Surrey or a Langley homeowner, here's what matters. The market is now selective. If your home is well located, well presented, priced properly, and has family functionality, it will sell. However, if your home relies on 2021 energy, it's probably gonna sit because buyers have options. And when buyers have options, they punish the awkward layouts, overpricing, the maintenance risk, strata risk, and basically anything that feels like someone is trying to get away with something. Now, if you're a buyer, especially a family trying to get into a better neighborhood, this is where opportunity lives. But not because prices are cheap, but because the leverage is back. In a high inventory market, you can take your time, ask better questions, negotiate harder, and avoid running into the wrong home. And for families, the win isn't just price, the win is choosing the right street with the right school catchment, with the right layout, without bidding wars forcing you into bad decisions. Now let's talk investors, because I know I have investors watching as well. 2025 is not a buy anything and wait environment. If you're an investor, your edge is underwriting and exit strategy. You always have to ask yourself, who is my exit buyer? What happens if rent stays flat? What happens if vacancy takes 30 to 60 days? What happens if strata rises faster than the rent? And this connects directly to the rental market shift we're watching. CMHC reported Vancouver's purpose-built rental vacancy reached 3.7%, which is the highest level we've seen since 1988. CMHC also tied this to record rental supply coming to market and reduced demand from low population growth. So if you're buying condos or rental product, you need to understand this part. The rental market is more competitive. Tenants have more options, and that reduces the guaranteed rent growth story that we're used to seeing. Now, what does all this mean in 2026? Here's my take based on structure, not just the vibe. 2026 starts with buyers in a stronger position than they've had in years. More inventory, lower benchmark prices than last year, lower borrowing costs than a year ago. But the wild card here is demand. Will buyers come off the sidelines? If they do, inventory can get absorbed faster than people expect. And if they don't, the grind will continue. And this is why spring matters. Spring is when sellers relist, new sellers test the market, buyers re-enter, and the entire year's tone gets set. 2025 was not just slow. It was historically slow on sales while also being historically high on listings. Combination changes behavior, and behavior is what changes the markets. So if you're a homeowner, don't cling to peak pricing. If you're a buyer, do not waste this leverage. If you're an investor, don't speculate. underwrite. And if you want a real breakdown of what's happening in your exact pocket of Surrey, Langley, Vancouver, anywhere in the Fraser Valley, just shoot me a text at 604-288-7592. I could tell you what's moving, what's sitting, and what I would do if I were you. See you in the next video.